Hi, and thank you for joining us for our webinar today. We have myself, Julie Vella, and Ron Kraft. I myself have been working with Family First as a mortgage originator for 10 years and in the industry for 28 years. I enjoy working with first-time homebuyers. It's a pleasure to see them go through the process.
Hi, my name is Ron Kraft. I've been in the mortgage industry for 25 plus years, and I've been working with people that are first-time home buyers all the way through people that are building houses and need some more hand-holding. I've been with Family First for 2 years and very well versed in grants as well, the Homebuyer Dream Grant and any of the Pathstone and the not-for-profits in the area. Certainly have resources to help you with your purchase.
So this webinar today will give you a lot of information in regards to purchasing a home, going through the mortgage process, closing, and we're going to give you a lot of information about grants that can help you and assist in your closing costs and your down payment, etc. So hopefully you'll enjoy this, and if you have any questions, you can always let us know. So we wanted to talk about who we are here at Family First. We have been serving our members, as you can read, since 1969, and we began as just a single branch in Penfield for the Penfield School District employees. And now we have 5 branches, and we are owned by over 15,000 members as our shareholders. We aim to provide secure and innovative financial services to our members.
Why choose Family First? We basically are a not-for-profit organization focused on our members. As far as our mortgages go, if you're putting less than 20% down, you're going to be required to carry what's called PMI, which is private mortgage insurance, which basically shares the risk with a third party. And we actually have discounted rates versus your regular banks like the Chases and the Bank of Americas. Everything's local. Fast turnaround times, our underwriting's right here, our processing's right here. We're people oriented. We're people helping people. We're trying to help you reach your financial goals. And again, we are local, local, local.
This is just some common terms. We thought that, just to kind of explain some terms that you come across when you're purchasing a home, you're going to hear these words. And we thought maybe we just kind of explain some terms just so it's a little bit more helpful to understand. But I'm sure you've heard the word appraisal, but basically it's a report made by a qualified appraiser, and they put their opinion and estimated a value based on current sales in the range of the home that you're purchasing. So we do have to obtain appraisal of the property when you purchase a home to determine its value. And the next is contingency. So you're going to hear this contingency, and what it means is it's a clause in the purchase contract stating conditions that must be met in order for the contract to be binding. And there's different contingencies. Some can be contingent upon a mortgage commitment, most are, and also they're contingent upon sometimes on the property inspection, and also sometimes the contingency of selling the home that you own already to purchase the next one. So for first-time home buyers, you wouldn't have to worry about that. But as far as other contingencies that I mentioned previously, you may. So home inspection. So this is optional. We as the lender do not make you get a home inspection. Like I said, it's optional to you, and you can discuss it with your realtor typically. But it's an examination of the structure, mechanical systems. It's more detailed than the appraisal in different aspects, and such as mechanical systems and soundness, safety. And it makes you aware of any repairs that may be needed. Could be as simple as changing out electrical outlets. PMI, so private, we always say PMI, we shorten it with that acronym, but it means private mortgage insurance. And as Ron mentioned earlier, if you put 20% down when you're purchasing a home, you will avoid this PMI, which is an additional premium into your payment. This PMI is an insurance is written by an independent mortgage guarantee insurance company that protects the mortgage lender against loss. So the more you borrow up to the value of the home, the higher your PMI is going to be. So points, you're going to hear this word too. And what points means is that you can pay points to buy down your interest rate, or you can pay a higher interest rate and get a credit towards your closing costs. So basically, it's fees paid to lenders. 1 point equals 1% of the loan amount. So if and they give the example here on $100,000 loan. If you paid 1 point, you're going to pay $1,000. So these can be broken down by Ron, myself, on points if you want to discuss something like that when you're locking into your interest rate.
These are our general requirements. We're looking for a minimum credit score of 620. For the lowest possible costs and the best interest rate, 740 is the magic number there. We're also looking for a minimum trade lines of 3. And by that, we mean on your credit report, say you have an auto loan and you have 2 charge cards. That's best case scenario. If you don't have that, we can do what's called alt credit. And what we're going to basically do is we're going to go back and ask you for rent receipts. Did you pay your cable bill on time and things like that? Typically, the credit that we review on the credit report is over a 3-year period.
Down payments. So down payments, and sometimes this can be confusing because a lot of people assume the down payment is all you need to purchase a home. But in fact, there's 3 components of the funds that you need for closing, which would be the down payment, closing costs, and taxes and prepaids. So this is just one component, the down payment of what you need to purchase a home. And here is the different loan types and how much you would have to put down. So you can see our most common mortgage is the conventional mortgage. And that one you can put as little as 3% down if you're a first-time home buyer. We have a special first-time home buyer program called the Home Ready Mortgage, which is again 3% down. And again, I mentioned previously about the PMI. You have to put 20% down to avoid PMI. FHA, a government loan, going to be honest right now, the government loans are not real popular at this time in the market that we're in. However, if you did have to go with a FHA loan, 3.5% down is the requirement there. And the other thing about FHA, which you should know, is that PMI is on the life of the loan for FHA versus conventional. You can get rid of PMI at 20% down. Sunny Mae, so we do a lot of Sunny Mae. Sunny Mae is a conventional mortgage as well. And that one, the down payment is 3% of the sale price is the minimum. USDA is another government loan that is used in the rural areas only. You have to be really specific in a certain area. We could tell you if the property you're looking at is USDA eligible. So we can let you know about that. VA is for veterans, and that's 0% down, and there's no PMI there. So that's for veterans only. We offer all these programs, but I will tell you, most popular is a conventional mortgage.
Here are some of the costs to consider when you're buying a house. Attorney fees. New York State is currently in what's called an attorney state. So you have to have an attorney in order to do a real estate transaction. And the fees do vary from attorney to attorney. So it's a good idea while you're looking for your house, try and engage with an attorney and just get a flavor for if you like them and what the charges are. Closing costs, Julie just spoke about that. They're typically between 2.5% and 4.5% of your mortgage amount. Down payment, typically, again, if you're doing a USDA, there's no down. Most conventionals, 3% to 5% is the minimum. Homeowners insurance, this basically is insurance that if there's a loss to your property or damage, say a tree falls into the roof, it's going to pay a claim so that you don't have to pay out of pocket. You will need to pay a full year's premium in advance for this. The property inspection, again, that's optional. In the market that we have right now, there's not a lot of property inspections that are being done prior to closing. Sometimes they're done after the closing, just so that the home buyer can get a flavor for if anything needs attention. Taxes, again, will vary. Typically 2.5% to 4.5% of the purchase price, depends on the town, and it also depends on the type of property. Condos are typically cheaper than, say, a single family home, just because they have an association, and some of the normal things like keeping up the roads and the snow plowing are paid for by the association as opposed to the town. So those again do vary. Monroe County has a great website where you can go look up taxes. You can just Google Monroe County real estate tax and pump in your address and it'll give you the information.
Mortgage process. So this is good to know, kind of step by step, where the process is going to take you, where it starts, where it ends. And it's going to start with Ron and I, which is a pre-approval. So that's the very first thing before you even contact a realtor. The realtor, if you do, the realtor is going to tell you they need a pre-approval letter. So they're going to tell you go right to a mortgage originator, help you out with that. And that would be one of us. And so basically what we're going to do is we're going to ask you some basic information, such as your name, your address, your employer, that kind of information. And we are going to be running a credit report. It is a tri-merge report, so it's 3 bureaus that we're going to be pulling. We're going to take the mid score of those 3 bureaus, and we're going to use that as to determine your interest rate. So that's what we're going to be doing. We generate that pre-approval. We give you a copy, you give your realtor a copy. And it is also nice that if you are working with a realtor that you let us know right away who it is so that we can have communication between us all to keep everybody informed. Next, you're going to put in an offer on a home. And the realtor is going to be the expert in that area and help you with that, write the purchase offer. Then once it's accepted, the accepted offer and contract goes over to the attorneys to review and approve the contract. So that usually takes anywhere from 24 to 36 hours. They let you know how long that'll take. The next is we were talking about the inspection, and again, we did tell you it's optional, but it's not real popular in this market. We got a tough market with inspections, but either way, that is something you can obtain. You just have to discuss that with your realtor, which is the best option for you. Application, so that's where we come in. We take the information that you gave us from the beginning. We're going to be a little more detailed with the application, ask you a few more questions, and we're going to create an application and disclosure disclose all the terms of your loan through the application process.
Appraisal. We will send an appraiser out to the property. Basically, the only job the appraiser has is to determine the market value. They will look for a little bit as far as safety items go, like handrails and what have you. But they're really focused on the market value because they want to make sure what you're paying for your house is worth what you're paying for your house. Once you go through the mortgage process, we're going to pull that credit report. We're going to have the appraisal come back, and then we're going to have our underwriter review it, and a decision will be made, and you will get your mortgage commitment, which will state basically your loan is approved and here's the conditions to the commitment. After all the conditions are met, we'll be closing at the attorney's office. Your attorney will be there, the bank attorney, and typically the attorney for the seller. And that's where you get the keys to the new house and you can move in.
So this here is just talking about, it's kind of important on what to do, what not to do, what to do and what not to do when you're looking to purchase a home. And start with what to do. And basically you're going to, work with your mortgage originator and provide all the necessary documentation, so forth. That's for sure. And if you're purchasing a home with a first-time homebuyer grant, it's imperative that we know that you're interested in the grant. And we can tell you whether the funds are available. Some grants are first come, first serve. So we do have a very popular grant right now, which we're going to talk about shortly. But it is a first come, first serve basis. We are allotted so many grants, and after they're gone, then we got to come back next year for more. But what not to do is another real important thing, and this is even prior to speaking with us. You should not be applying for, if you're thinking of buying a home, you really shouldn't be applying for new credit during the application process, such as, a new auto, a new RV, things like that. because the more inquiries on your credit report, that can decrease your credit score, and you want to be in the best standing when you want to purchase a home. Also, you should not delay in submitting your loan application. If we're going to ask you for documentation, information, there's a real good reason behind it, because we want to keep up with the dates that are on your purchase contract, and we don't want to delay anything. We don't want to have you unsatisfied and not meet the closing date. So that's why we don't want you to delay. Increase in credit usage. So what that is basically saying is, if you got a credit card and you probably don't want to be using it and maximizing that at the time that you're applying, because the more utilization of your credit report brings your credit score down. Also, if you're putting cash deposits into, or large deposits into your bank account, you really shouldn't be doing this at least 60 days prior to applying for a mortgage, because we have to document with a paper trail where these large deposits are coming from, and especially cash ones. So it makes our job harder, and it's going to be more difficult on you. Also, if you're looking to change a job, you may want to mention it to us, in advance, so we can advise you what is required, what we need, if it's a good idea, things like that. So also notify us of any income increases or decreases. So hopefully it's not decreases, but if you change your job and for some reason it's something that the income decreases, we're going to need to know that, because we have to update your pre-approval in accordance with your income. So that can change things for you. And also, I know sometimes it can be stressful, especially as a first-time home buyer, of expectations. But if we ask you for additional documentation, and we're calling and we're reaching out by email and so forth, it's only because we are trying to get all of our documentation in order to get to the end result, which is getting you approved. So it doesn't mean that, things aren't going well. It just means that we need a little more documentation to get to where we need to be. So no worries about that.
Again, the mortgage team, as far as originations go, it's me, Ron Kraft, and Julie Vella. If you call in, you'll end up getting one of us, or if you email in, we will respond as well.
And we're also going to have a recording of this this webinar. So if you wanted, that is going to go on our website. And also you can see here our email addresses, and our phone number. So if you need to contact us, if you want to copy the recording, we can tell you where it's located and so forth. Or if you have any questions, you can see our information right here. And then also we have the rest of our team here, which is Bill Holyfield is our mortgage underwriter. He's basically handling everything we just said, which was he's reviewing the income, reviewing your assets, the appraisal, and so forth. And he is the one who's going to be committing and approving your mortgage. Lisa Willie is like our right hand here as the mortgage processor. We take our information with you, and then she kind of puts everything together as far as documentation. So she would be reaching out to you as well and asking for documentation further along the mortgage process.
We also have, we told you that we were local. Well, we service our mortgages right here as well. And Alice Hooker is the one that does our servicing. She's the one that would answer any questions during the process after you close. And then we have Colleen Perry Curcio, who is our mortgage manager, which has, Colleen comes to us with great knowledge. She's been an underwriter. And working with her has been great, because she knows the guidelines inside and out. It's really nice to have somebody like her helping us along.
So we want to talk to you about, which is a huge part sometimes of being a first-time home buyer, is possibly being eligible for grants and assistance towards the closing costs, down payment, etc. And so we have several options here at Family First, which we're proud to have these options for you. And we're going to present some of these coming up.
So currently, probably our most popular grant is the Homebuyer Dream Grant. Last year it was $10,000, and this year it's up to $20,000. And here's basically how the program works. You have to be a first-time home buyer, and $19,500 goes towards either your down payment, closing cost, and or your taxes, any combination thereof. You also are required to take a homebuyer first-time homebuyer course, an educational course that can be online, which is a couple-hour course. It basically runs through what you should expect as a homeowner. And that is a $500 charge from the grant. So that totals $20,000. So you also have to qualify on the income side. There's income limits, which are based on family size. It's broken down into 1 and 2 family, and then 3+ person families, and it's broken down by county, and each county has a different limit. We actually have these numbers on our website. So if you want to go to familyfirstny.com, you'll be able to see them. But just to give you guys an idea, I'm looking at Monroe County right now, and for the Homebuyer Dream Program, let's see here.
Monroe
right?
County, there.
So 82,960 would be the limit for the 1 and 2 person household. And then if you were a 3+, it would be 95,404. And again, you can go to our website and you can see a breakdown of every county in New York State as far as that goes. One of the things that we have to send into the Federal Home Loan Bank is the one that sponsors this grant. We are a member of the Federal Home Loan Bank. They're going to require 30 days of your pay stubs. And the reason they do this is they want to make sure you don't make too much money for the grant program. So if you're thinking about buying a house, start saving your pay stubs if you get like paper stubs, or try and find out if your employer has a place to log in where you can go get your pay stubs electronically and be able to supply them to us.
So here at Family First, we offer Sunny Mae mortgages, and Sunny Mae stands for State of New York Mortgage Association. And with this, the Sunny Mae mortgage is a conventional mortgage. So we do follow all the guidelines of Fannie Mae for this type of mortgage. And there's 2 programs that essentially we're offering here. And one is called Achieving the Dream, and the other is the low interest rate program. And they're both 30-year fixed rate mortgages. You cannot get them for any less than 30 years. And the minimum down payment is 3%. Also, the rate locks for 120 days, which is longer than the typical mortgage. And the minimum required borrower cash contribution. So one thing with Sunny Mae is they do require that you put in 1% of the purchase price of your own funds. So basically, and even numbers here, if it's a $100,000 purchase price, you have to have your own contribution of a 1% of the purchase price. And what's more important is you have to have these funds in your bank account before you apply. So it is necessary to at least have that. Plus, I do tell folks that you should probably have about 2,000 to 2,500 of your own funds in your bank account while you're at bare minimum before you start looking around for homes. And it's not a good idea if you're not prepared, because there is some upfront cost before any grants or credits come in at closing that you're going to have to cover some costs prior to. Those costs will include a deposit. You need to put a deposit down on your contract, which typically is a minimum $1,000 right there. Then you're going to have to pay for an appraisal. That's around $400 to $500, and you're going to pay for a credit report. So, and then you have some homeowners insurance you're going to cover too. So it really is necessary to have at least 2,500 before you even start looking around for a home, because these are upfront costs before any grants come in at closing time. So Sunny Mae does allow unlimited grants in addition to their down payment assistance loan. So what they're saying here is Sunny Mae offers, we call it short DPAL, but stands for down payment assistance loan, and it's 3% of the purchase price, or a minimum of $3,000. So basically, back with that $100,000 purchase times 3%, you're going to get $3,000 right there in a Sunny Mae down payment assistance loan. On top of that, you can get the $20,000 Homebuyer Dream Grant. And in other cases, we do have other grants you can get in addition to those too. So Sunny Mae does allow that. I think they're the only one that does allow the unlimited grants, which can really help you out.
There's also an organization in Rochester called Pathstone, and they will offer down payment assistance loans up to $5,000. There's no minimum credit score. You do need a minimum of 3 trade lines. Unfortunately, this grant does require a payback. It's used if you're in a pinch and you just don't have the money available to buy the house, but you do have to pay this back. And you can pay it back anywhere from 1 to 5 years. The debt to income ratio is 45%, and that is the max.
Pass on closing cost loan. So most recently, I'm going to be honest, is the Homebuyer Dream Grant has been the most popular, but this is still out here as an option, and it can be used for the down payment, closing costs, and taxes. Again, this loan is secured to the property, so it is a lien on the property, and you must complete the first-time homebuyer education course. And also, these loans can be combined with different grants and down payment assistance. So if you're interested in something like this, let us know. One thing that is really important about qualifying it for the grants and so forth, and especially Sunny May, which we talked about a little bit, was that you cannot have any late payments on your credit report in the last 12 months. And what I mean by late payments is over 30 days. So that should be something you discuss with Ron and I, but typically that is not allowed to have any late payments in the last 12 months, and any unpaid collections need to be paid. So those are a couple things in regards to credit.
There's also a Sheen Housing Grant. Again, this is up to $3,000, which you can use for closing cost assistance. There is no interest, but it does require a repayment, just like the Pathstone Grant, $50 a month for 5 years. First-time home buyers only, and the definition of a first-time home buyer is someone that has not owned a home in the past 3 years. This can only be used on single-family homes, so if you're looking to buy into a double or a multifamily, it won't work. And like all these courses or all these grants, again, it does require a first-time home buyer education course.
So Ron mentioned earlier that there you should have a tab there that you can click on for Q&A. So for questions, we'd love to answer any questions that you may have about the material we talked about or anything else. So let us know if you have any questions. We can go into the Q&A this moment and see if we can cover any of those questions for you. Okay, so we got a question here. It says, how far in advance of looking for a property should you get a pre-approval? I say if you're looking for a property, you should be getting a pre-approval before you look at the property. So I would definitely say in advance of, I mean, as long as you get the pre-approval before you start looking at properties, you'll be in good shape. And you're going to need a realtor to look at properties. So just keep in mind that realtor is going to want the pre-approval. So hand in hand, you're going to want the pre-approval first, and then the realtor, and then you look at properties.
Another question is what programs are out there for lower income individuals? So Sunny May has Achieving the Dream, which is geared toward a lower income. You actually do get a better rate than what they call the low interest rate program, which is kind of a misnomer, but it gives you a break in the rate. And coupled with the Homebuyer Dream program, which again is a $20,000 grant. And then you could use any of the other, you could use the DPAL from Sunny May as well, a down payment assistance loan that could cover more of your closing costs. So there are programs out there that can help you. What I suggest doing is we'd have to know a little more specifically what your income is to see how we could help you, to see what you could qualify for. Send us an email or give us a call, and we'd be more than happy to help you out.
I got a question here. If I did a home buyer course in the last 4 months, do I need to retake it? Good question. So the certification for your home buyer course last is relevant for 12 months. It expires after 12 months. And so then you would need to retake it if it's beyond 12 months. So if you took it in the last 4 months, you're still good to go.
Another, this is kind of a question slash statement. I stopped looking before summer due to the grant program ending. So typically, the grant program runs until the end of August. And then what they basically do is they kind of, all the institutions that haven't used all their money, all their grant money, the Federal Home Loan Bank pulls it back in and then they redistribute it. And then it's typically good to the end of November if funds are available. So don't give up. Don't give up early. Contact us just to check and see what we've got left. And if there's money left, you can certainly keep on looking. I know it's a hard market. It's definitely a seller's market, and it can be frustrating. But with the $20,000 grant, that should help give you some leeway where you can be in the game and compete with other offers.
The next question was, is there a time frame you have to be in the program before getting a pre-approval for a mortgage? Okay, so you know, back years ago, you had to be in like this first time home buyer like savings program, and you signed up in advance. And but now it's no longer like you have to be in a program. Really what it is now is the grants are a bit more forward, and we go for the like the home buyer dream grant when you're in contract. So the best thing you can do is to reach out to one of us and get a pre-approval, and then we can tell you what grants you're eligible for. And as long as you're pre-approved, we can't technically put you into a program until you have an accepted offer. So just want to give you a heads up on that.
Okay, when looking at household income, if only one person will be buying a house, but currently lives with their parents, is it still a one-person income? The answer to this would be yes, if your parents aren't going to live with you at the new house. It's basically household income is who's going to be living there. So if you're going to go out on your own and buy the house, then it would just be your income.
Um, and then your question here, the next one is, are you guys different from ESL Dream programs? So we are not the only lender that offers the Home Buyer Dream Grant. ESL does have the Home Buyer Dream Grant as well as some other lenders also. But I will say that due to us being a smaller lender, we have grants much longer than every lender that's close by. So we tend to have grants all, for much a longer period of time, just because we're a smaller lender, not because any other reason, but just because we're a smaller lender, we seem to have more grants available for a longer time. So if that helps you at all. If I'm not married, but I'm house hunting with my fiance, can we base it off one person's income or does it have to be both? Good question, because a lot of this validation, here's the thing. Okay, so if you are not married, but you're house hunting with your fiance and you two plan to reside in the home together, that's really what it's all about. If you plan to reside in the home together, we do have to verify both incomes.
Another question is, do we have to come into the branch to get a pre-approval set up, or can we do it online? So we do a lot electronically and online. Not that we don't prefer to meet with you, but sometimes just for convenience, we do have a form that we can send you through a secured link where you can complete it, and then we can do the pre-approval for you. I usually like to talk to somebody about, where they want to buy. So when we do the pre-approval, we kind of have to get a flavor for geographically where you want to be, because one of the things that is incorporated into the pre-approval is we have to throw in a number for real estate taxes. And if you say, well, I want to live in the city or I want to live in Pittsburgh, the number is going to vary. So we have to get a flavor for what that number is going to be. So we could absolutely do it basically online. Just send us an email with your name and we can shoot you that pre-qualification form.
The next question, is, does Family First offer the home buyer education certification? So no, we do not offer it here at Family First, but we have wonderful nonprofit agencies that we work with, that we have partnerships with that do offer the course. We have links for these nonprofits, and those include Consumer Credit Counseling Services, so CCCS of Rochester. We have the Pathstone, and we have others that we can provide you with the link and the information so you can take the course. But they do offer the course online, so that makes it a bit easier for you. But yeah, if you reach out, you have our emails on this. You can reach out or even just give us a call. We'll send you the link for the course. It takes several hours for the course. There is a cost to the course, just so you know. So be prepared for that as well.
Another question is, so after this meeting, do we reach out to you for the next step? That would be the next step. Yes, get in touch with us. Either give us a call or send us an email so that we can send you that pre-qualification form so that we can get the ball rolling for you.
The next question is the Sunny Mae loan shown in the beginning the same as the Sunny Mae grant? Are those two different things? Okay, so you have to take a Sunny Mae mortgage in order to get a Sunny Mae grant. Okay, so one goes with the other one. So if you don't get a Sunny Mae mortgage, you're not going to get a Sunny Mae grant. And so basically what it is we would have to qualify you for the Sunny Mae mortgage, and then we'll let you know. And they offer a down payment assistance loan. So they call it the Sunny Mae DPAL for short. But with the Sunny Mae, you do mortgage, you have the option of getting the Sunny Mae down payment assistance loan. So they're two different things, but they are combined together. You have to take them out together at the same time.
Did we catch Chris's question about?
No.
Okay, so a question that was asked about the grant programs. The Federal Home Loan Bank program, the Home Buyer Dream program, there are restrictions in the sense that they want you to live there for 5 years. So they're basically giving you $20,000 and they're hoping you stay there for 5 years. But they do understand that things happen. Say things change, you get married, you have kids, you need a bigger house. There is a recapture that they have a calculator that you'll have to pay them back some of the money that that they basically granted you, and that we have the calculator to do that.
So I see a question here. If parents plan to gift their child money towards the child's house, what is the best way to do that? And does it preclude them from? Okay, so in regards to anything when you're working with bank and lending and mortgage and process, everything is a paper trail. So when you're receiving, you can get a gift from a family member only. And what they would do is they would write you a personal check out to you and you deposit it in your account. Or you can get a cashier's check from your family and you can deposit that. Or you can do a direct transfer from the parent's bank account to your bank account. However, we would need proof of all this with a copy of the check or copy of the bank statements. We also would need, a gift letter that goes along with that, completed by the parent. So that is a paper trail. I would not have anybody just go ahead and deposit money before you even purchase a home or, before speaking to one of us, so we can tell you exactly how it's done. And as far as does it preclude you from the grants? No, you can get a gift money, and you can get the grants. So no worries about that.
And you can also get, recently I've run into people that are buying from their parents or their grandparents the house. You can also do a gift of equity from the owner of the house to the buyer if they're related.
Looking to see if there's any more questions.
Would an inheritance count as gift money? Generally speaking, I just had one of these and no. But again, what we would do is it's all about the paper trail. It's not like we're going to ask you for bank statements, but we're probably going to need something that says like a copy of the will to say that you are due this money, to know that it was a legal transaction. Because the Patriot Act requires that we source all funds coming into your account. So that's why we're always chasing the source of where the money came from. It's not that we want to do it, but it's a federal regulation. If the file gets audited, they look for stuff like that. So don't think we're picking on you. It's just it's a Patriot Act.
So the next question kind of relates to what Ron had touched on about the gift of equity. So the gift of equity, basically, if you're getting a home from a family member, grandmother's home or something like that, and let's say they want to sell it to you for 150,000, but the value of it is 200. Okay. So what they would do is there's got to be something to um, state that the other 50,000 between the 150 and 200 that it's technically worth is given to you in a gift of equity. So that 50,000 is considered to be equity in the home, and there has to be some sort of representation where it's going. So what the family member would do who's selling you the home would complete this gift of equity letter, and that would state where that other 50,000 is coming from. Or we're going to be asking you, if we don't have that gift of equity letter, we're going to be asking you for those funds. We're going to be asking you for that's going to be considered part of the down payment. So basically, you're going to want to, if you have this situation, you're going to want to ask your family member if they want to basically gift you the equity if the property is worth more than they're selling it to you for.
And the significance of doing it that way is Julie and I both talked about private mortgage insurance. The magic number is when you can get 20% down, that the PMI is not required. So that gift of equity that would be coming from a family member potentially could bridge that 20% down so you wouldn't have the PMI. And that's generally a pretty big savings. So it leads to a lower monthly mortgage payment.
I wanted to let everybody who's still on here know that you will be getting, everybody who is on this presentation today, and we'll be getting a link to this whole presentation tomorrow in your email. So that should definitely help. And on there is also, like I said, our contact information. So you will be getting this presentation. And I'm also going to put this into, had a request to put this into there's one more. I think we have one more question.
Yeah,
You got it?
Yep. So another question, if a seller is not accepting FHA loans, will they accept a Sunny Mae loan? So typically the reason why a seller is not going to accept an FHA purchase contract is because there's some issues with the house with respect to safety and what have you. A conventional loan doesn't dig into those requirements, and Sunny Mae is a conventional loan. So the answer to your question is, would they accept a Sunny Mae? Probably, if they're worried about the condition, that it wouldn't go FHA with like roofs, scraping and painting sometimes. It's just FHA digs a little bit deeper in because their theory is they're letting you borrow almost 100% of the value. So they don't want things going wrong in the near term, like the roof, and they want handrails on steps and safety items.
Okay. I just want to see if something else came up here. Believe no, that was probably the last one.
Pop back to Q&A.
Let's go back to question. Yeah, let's go see if there's anything else where we don't want to miss anything. Second, sorry, bear with us 1 second. I think we kind of covered that. So, anything else? We appreciate you sticking with us here and going through the questions and answers, because sometimes, questions you don't even think of, other people are asking, and then you get your answer yourself. So, so this whole presentation has been recorded. So like we said, we will be getting a copy in your email tomorrow. So hopefully that's helpful as well. And we are here to help you with whatever that any questions that you have. We both have a long time experience in the mortgage industry. So we'd be very helpful to answer any questions you have.
Thanks again, folks. Have a great evening.
Thank you so much. And we'll hopefully be talking to you soon. Have a good night.